See, carnage is actually a slightly extended word. Why? Because for me, at this kind of a level, 3-4% is what I would really call as a carnage. I mean, 1% I would still say that the markets were looking for a reason to correct and they've got reason to correct. But how do you read into the setup? See, of late, Indian markets have outperformed global markets. Even though the global correction has kicked in, Indian markets have done rather well for themselves. So are we likely to outperform? That's number one. Number two, even if markets they peak out, are we in for what could be called as a typical bull market correction, which is that things will be volatile, the sell-off will be very sharp, the sell-off will be very swift, and the sell-off before you realize actually will get over. What is disturbing for me is the fact that FIs they're still sellers, and even though yesterday FI versus DII was a net neutral number, markets they still fell. So while as of now, I think you can easily assume that market will run into resistance and there would be a bout of volatility and with a sharp sell-off if global picture deteriorates. But for me, what really matters is that what tone now HNI investors and retail investors they do. Yesterday's picture, especially FI versus DI, let's put it on one screen, was a net neutral number. Yet markets they fell. To becha kaun? I mean, obviously there was unwinding at the HNI level or at the retail level. Otherwise, markets would have not fallen in that kind of a jiffy. So that's a grey area for me, which is that if I look at the market trajectory, I think you've run into resistance. Global cues are just not supportive. And FIs are selling, DIs are buying, but markets are yet falling even though number is neutral. That means somewhere unwinding has started at a local level. This could be opportunity. This could be profit taking, this could be pure skim from the top, very difficult to fathom. But you need to just say that, okay, I'm going to take a deep breath before I start going now. Aisha, you should not short the market. Why? Because you don't know how sharp the turn is going to be. Typically, it's a market where you should not short until and unless something really changes at a global level. Second, we are in for a volatile patch because of macros. Commodity producers will do well, commodity consumers are unlikely to do well, which means a further selling or numbness in, let's say, autos, in capital goods. Those pockets in the near term cannot be ruled out. Third, I think from an earnings season standpoint, I don't think we are in for any big upgrades. Since we are not for any big upgrades, this time around the earnings season may have a very diluted impact. It will be very stock specific, and in general I think brokerages are unlikely to upgrade their targets at this higher base earnings season. So the trigger actually in the market is not there. So it's going to be sentiment, it's going to be individual stock reaction, and a lot will now be dependent on flows and what HNI positioning would be in the run-up to the election. We are talking about it, but we are not realizing that election is starting soon and the chatter will start soon. So the positioning by HNI and retail would be the key to understand which way things would move in the run-up to the election result.